If you're considering paying off your mortgage early, I'm here to share 3 unexpected benefits that I had learned after paying off my mortgage 2 years ago. Now, I got to start off and say that this is our happy home, our forever home. This is going to be a home that we live in practically for the rest of our lives. I would say that if I was in a home that I don't expect to live in forever, maybe I'm going to move out soon, I wouldn't have rushed to pay off the mortgage early. But if you find yourself in your dream home and you want to get rid of that mortgage, this is what's so cool, and I'm excited to share with you these 3 realizations today. I will say my first home, though, was not my forever home. This home was one that we bought as a starter home, and the idea was we were going to live in it for about 3 to 5 years, and once we started having kids, we were going to move out and upgrade to a larger home. What we didn't realize, though, is that plan and that timing, that wasn't going to work in our favor. The great financial crisis of 2008 and 2009 hit, and we watched that house value go from $200,000 all the way down to $85,000, which meant we were underwater on our mortgage. And I remember sitting there thinking, we're never going to be able to afford another home ever. This starter home is now our forever home. And if you feel like that, if you are in a home that you're like, I don't know if I want to stay in here or not, know that it's interesting how things always tend to work out. And it may take a long time. In this case, it felt like a long time, but now looking back, it wasn't all that long at all. 10 years instead of 5, but now we're in a house that we absolutely love. And when we moved in here, I had an idea. I'm like, I want to challenge myself to pay off the mortgage early. And here's why. I want that sense of freedom that every month, at the end of the month, I don't have the nagging bill of $2,000 for that mortgage payment coming up every single month. I want to be able to go to the end of the month and be able to cruise right into the next month without having to worry about the largest payment hitting my bank account and trying to figure out how I was going to pay it every single month. So we set out to pay off that mortgage early. And 2 years ago when we did, it was amazing. I mean, obviously, when you pay off your mortgage, what a burden lifted off of the shoulders. But then there were 3 things that hit me that I wasn't expecting. Let's go over them. Unexpected benefit number 1. A sense of freedom. Now, this one could be a little bit obvious, but there's more to it than you would think. So 2 years later, I sit here, and at the end of every single month, I look and I'm like, I don't have to pay a mortgage payment. And you would think that would wear off after a couple months. 2 years later, that sense of excitement still comes over me to say, we can cruise right forward into the next month. And with that extra money that we would have had to pay that mortgage payment, what do we want to do extra this month? Do we want to invest a little bit more money, which in fact we do? Or do we want to put some of that money aside in our budget and do something fun with the family? We have a little bit more freedom with our money to have the flexibility to do more things. In fact, in December of last year, we decided to take a trip to New York City. Now that's far away from where we live, so we had to fly up there, get an expensive hotel, but we got to check out the Rockefeller Tree, and that was so cool. We got to check out some Broadway shows. Super awesome. And we wouldn't have been able to do that in the past because the budget was really strapped down by that monthly mortgage payment. But now, with that extra fund that we have coming in every month that we don't have to pay, we can afford to do extra things that we never were able to do before. That sense of freedom and flexibility has been absolutely incredible, even to this day, 2 years later. Unexpected benefit number 2, having power over money that I never expected. A lot of people gave me a very hard time about paying off my mortgage early instead of investing. It really is an age-old debate between investing versus paying off your mortgage early. And I actually did a video that's very interesting, and I'll link it down below in the description if you want to check that one out after this. I was shocked at that calculation result. See, I could do things that you can't do when you have a mortgage payment. Like, for example, you can dynamically adjust your life. So think about it this way. Let's say your mortgage payment is like mine was, $2,000 a month, or maybe it's more, which means you have even more money left over at the end of the month once you get that mortgage out of the way. The interesting thing about it is if you have that money invested, if you took all the extra money that you made and invested it instead of paying off your mortgage, that could be fine. And yes, sometimes the math will show that investing can grow faster than paying off the mortgage, especially when you consider in inflation. But what it doesn't account for is at the end of the day, when you're strapped, or let's say you get laid off, you're stuck. You got to pay that monthly mortgage payment no matter what. And the worst part about it is you could say, well, I'll take my invested cash and pay off the mortgage. No, because likely if the economy is down, the stock market's down, which means you could see your portfolio balance drop. Are you really going to want to sell that invested cash and pay off the mortgage at that point? Either way, you're stuck in a panic. And I wanted to avoid that, especially after going through the 2008 and 2009 financial crisis. I didn't want to play that game. What I wanted to do is after I pay off the mortgage, then invest. So the trick with that is now I can adjust my life based on freedom and flexibility. So let's say I don't want to work anymore. Let's say I want to adjust my working hours, maybe spend more time with the family and find a job. Hey, that job could even pay less money. But because we don't have the biggest payment coming out every month, we have flexibility to do that. Imagine going in and saying, you know what? I'm done with this job. I want to go on and do something different. With not having such a big payment, and having that freedom and flexibility of no rent, no mortgage, and a free life and a free house, you can adjust those things because everything else in your house and your life is adjustable after you're debt free. For example, you need to cut back on some bills, you can easily cancel Netflix, you can easily cancel or reduce your phone service. You can do a lot of things that are flexible. What's not flexible is debt. You have to pay your mortgage no matter what. You can't flex your mortgage unless you're going to sell your house or something like that. But then you still got to live somewhere, so you still got to pay money. But without that mortgage, you have that flexibility to do whatever you want, whenever you want. That power and control was worth it so much more to me than invested cash. Now, I invest like a madman because we're going for financial independence and being able to retire early. But having that ability and that freedom really helps jumpstart the entire process of investing. That power over money also made me realize something else. I didn't realize that when you pay off your mortgage, you actually don't have to pay home insurance. Now, you kind of want to. Don't get me wrong. I'm not saying go out and cancel your home insurance. But you actually have power and control to adjust that. So let's say, for example, you have this goal and you're going to make as much money as you can. Side hustles, pizza deliveries, extra jobs, whatever you can to pay off that mortgage. So you become debt free and then you take all that money and you start investing. If you invest enough money that you grow to a sizable portfolio, you could make the decision that if you have enough money to cover the risk of your home loss, or an emergency, or a new roof, or a new termite damage problem, or whatever that may be, you could actually, if you wanted to, opt out and reduce some of the insurance. Now, that may change based on certain state requirements, but where we live, we could do that. We have that power and control. Now, see, if you have a mortgage, you can't do that. The mortgage company needs to ensure that they get their money, and they need to ensure that asset is protected. But I didn't realize that, you have that power as well over your money. Let's talk about unexpected benefit number 3. Having time to actually invest. So the big question I kept having is this really the right decision? Should I be putting so much money, all my side hustle money, all these things that we're doing, should I really be putting all that extra toward the mortgage, or should I really be investing? Because the math and everybody here on YouTube, especially in the comment section, says that investing is the better way to go. Am I really making the right decision? But then I realized, depending on your age and when you decide to start taking this crazy journey of paying off your mortgage, you still have enough time to invest. And if you're really calculated with how you do what you do, you can have time on your side to invest more money. As long as we focus on staying healthy, even if we're in our 40s or our 50s, we still have time to invest to build a sizable portfolio over the next 10, 20, or 30 years. In fact, without one of the largest expenses, which is your mortgage, you could then afford to retire with less money than some other people need when it comes down to being able to afford a life after working and income. Having time to invest is what I'm looking forward to. Growing my portfolio to $2.5 million over the next 10 to 15 years. But a lot of people did comment on my other videos saying it would have made more sense if you would have just invested all that money and used that invested money to pay off your mortgage a little bit down the road. And that does make sense. And I love to be an optimist, but I do worry about the fact that what if I get laid off, or what if I get laid off and the stock market is crashing at the same time, like it did in 2009. For a lot of you who haven't lived through 2009, some of you don't realize the sting that caused, because not only are you facing a potential foreclosure if you lose your job, your stock market portfolio dropped by 30%. And you could have sold it and maybe applied that to the mortgage. Or if that didn't make up, you're really up a creek that you don't really want to be. And I found that getting out of debt completely is much more exciting from a blissful freedom perspective than investing could ever be, in my opinion. And at the end of the day, it helps fuel you, especially if you do it in the right time and you dedicate and sacrifice the resources to get more income to pay it off, to getting financially independent. And if you're interested in more financial independence, make sure you subscribe for more. Check out this video next. We'll see you on the next video.